Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. I've got an interesting one today. I've shown you all along what has happened with the US debt. It has been expanding, and they can continue this whole process because there's always a buyer. But what happens when the buyer sells? The first thing we will talk about is how the biggest buyer of US debt is quietly selling billions. The second thing is the crisis above all else. What's going on here right now at this time? An issue I've been covering a lot recently. And the third is that the markets have gone haywire. I will give you some ins and outs on that and more. Let's begin. Biggest treasury buyer outside of the US is quietly selling billions. This comes out of Bloomberg. Japanese investors can find good debt opportunities in Europe. Rising currency, hedging costs, and Fed hikes deter inflows. So we could see this right here. Times of treasury turmoil, the biggest investor outside of American soil has historically lent a helping hand, not this time around. So it's generally fluctuating in between Japan and China, but as China has been kind of selling off their own share, we have seen Japan rise in terms of the total, and now seemingly that has started to change. Japanese institutional managers, known for the legendary US debt buying sprees in recent decades, are now fueling the great bond sell-off, just as the Fed pairs its $9 trillion balance sheet. So the Fed is going away from that. But of course, that's okay, let's say, as long as there's another buyer to pick up the pace. But what happens when both Japan and China start to let that go away a little bit? Estimates from BMO, based on the most recent data, say that they've unloaded almost $60 billion over the past 3 months. That may be small compared to their $1.3 trillion, but what is the trend here? That's because the monetary path between the US and the Asian nation is diverging every more. The yen is plumbing 20 years lows, and market volatility stateside is breaking out. Remember, as you see the yen, actually shows it right here. Here, you can see the Japanese currency for treasuries at the highest level in 2 years. Looking at that, this is the currency cost. But if you see what's happening with the yen itself, it is devaluing right now at this time. And why? Why? Well, you're pumping all this cash in for this period of time, and you cannot resolve that by doing more of the same. So you can see what's happening with their currency directly related to all of this. It's weakening, and it should be weakening, because they are aiming to continue their policies while most countries around the world are doing the opposite. They want to tighten. And so we could see that, for example, with the US, yields are rising. Well, in Japan, they are saying we are going to remain in this easy monetary policy forevermore. While an aggressive Fed tightening cycle to combat inflation could result in multiple 50 basis point hikes in the coming months, the Bank of Japan remains locked in endless stimulus that's weakening the yen and upending the economics of buying treasuries, even as the 10-year Japanese government bond remains capped around 0.25%. So they go on, and you could see it for yourself from what's been happening over the last little while, but understand that there is a big change today. I want to connect that in with the next article. I'll show you in just a second. But anytime you want to see this, you can go to a search engine and type in major foreign holders of US Treasury securities. That should pull it up, and you will get the actual treasury.gov website. I have a full video about this in my e-course that is on the playlists on this YouTube channel. So if you go to the playlist, you will see that it breaks that all down, how to get that information for yourself. And you could see it right there, okay? You don't have to guess. You don't have to wonder. It's updated consistently, and you can see that, okay? Fed tightening cycles and the associated market volatility have tempered Japanese buying of treasuries in the past, but in this cycle, the high level of uncertainty surrounding U.S. inflation interest rate policy may trigger an extended absence. So we will see what happens. Of course, with the Federal Reserve starting to wean off their balance sheet, I'm interested to see what's going to happen. If you're going to have all this debt, you got to have a buyer. Who do you think will buy it up? Will the Federal Reserve turn around and start buying up all that debt? Will it continue to pile up? Will it swell? Will it create exaggerations inside of the monetary system? And then the Federal Reserve has to react super fast and aggressively in a different manner? We'll see. China meets banks to discuss protecting assets from US sanctions. Officials are concerned that measures taken against Moscow could also be applied to Beijing. So China's worried, hey, if they're doing it to Russia, we could be next. And they specifically mentioned in this Financial Times article, looking at Taiwan. That's been the big one. You could see right here, if China attacks Taiwan, decoupling of the Chinese and Western economies will be far more severe than decoupling with Russia because China's economic footprint touches every part of the world. And that is obvious. You know that China has their ties in with everybody. They're the manufacturing hub for the whole world. And I've even heard recent reports of, people trying to take their manufacturing and move some of it over to Vietnam and then encounter many problems dealing with Vietnam because that well-oiled machine simply isn't there. And that's on a small scale from what I have heard. But anyway, that's just what I've heard. So, and you can see here, Chinese government has a right to be concerned because it has very few alternatives and the consequences of US financial sanctions are disastrous. But I don't think that could necessarily happen in a short order and would happen. Look at this. China still holds more than $1.5 trillion of US securities. So all different types of securities, including the corporate stocks, as they say here. But you can look at that and just have to figure they've got a real heavy control over the United States. Whoever is the creditor has that control. No one on site could think of a good solution to the problem. China's banking system isn't prepared for a freeze on its dollar assets or exclusion from the SWIFT messaging system, as the US has done with Russia. So if there were major sanctions to the same level as Russia, which I do not expect, even if they go for Taiwan, I still don't think so. Just simply the fact that they are so intertwined, that they are so integral into the system today. But regardless, we need to be just aware of this and understand how significant it is, okay? As they say right here, it is difficult for the US to impose massive sanctions against China. It is like mutually assured destruction in a nuclear war, saying we can't do it. But we will see, of course, as always, with what happens. Let's talk about this next level of crisis, okay? You can see financial crises, you could see all these different things that have unraveled over the years. Nothing, in my opinion, is more important than the food crisis. For the first time ever, farmers the world over, all at the same time, are testing the limits of how little chemical fertilizer they can apply without devastating their yields come harvest time. Early predictions are bleak. So in a sense, yeah, less chemical fertilizers, obviously good. But if that does equate to less yields, that means for the entire global population, there will be less food available. Simple matter of fact. That's why I recommend everybody, if you can, if it's possible, grow in your backyard. Do what you have to do. There are so many examples of people on YouTube that you can go and check it out, where that person has a standard property and they find a lot that's somewhere reasonably close to where they live, and then they grow food on that lot. Okay. And sometimes, maybe in the backyard of a place that's being rented out, that place, that person doesn't use that backyard. It's just empty. So they say, okay, I'll rent out that backyard for this much. And some of them even sell that food. They sell it to local restaurants, they sell it to other people and so on. So there's many opportunities, but I think regardless, feeding the population, number one priority. This happens on a small scale. The smaller scale that does, I believe, is the most important factor. I've looked into that a great deal, and I'm constantly reminded about that. Farmers will grow enough to feed themselves, but the question is, what will they have to feed the cities? I mean, Just think about that. I mean, I'm always bringing this up and I get that, but look at where we are today. I mean, check this article out. Food banks are serving more people again as inflation squeezes the budgets. Higher costs and supply chain problems are straining organizations as they look to meet the rising demand. So the actual institutions themselves, they can't get enough food because maybe their budget is, let's just say, $100,000 or $1 million, and now that doesn't buy them as much as they used to before. Fertilizer buyers are eyeing Canada to fill the global potash deficit. Saskatchewan sits on the world's largest potash deposits. Russia's invasion of Ukraine is disrupting the fertilizer supply. So will Canada be able to do this? We will see. That is obviously beneficial to those involved in this and the companies involved in this. But I don't know if they're actually going to be able to go ahead and make this happen. We will see. Okay. Devastating tornadoes ripping through Kansas. You have heat waves scorching India's wheat crop. I mean, these events, I had like 20 of these, but I'm only going to show you these two. But many, many different events that are happening all around the world are negatively affecting crops right now at this time. I mean, yes, it does happen all the time. There's, some weather problem here or there, but so many, it seems, right now today at a time in which food prices are historically excessively high. Let's get into this next topic. Here we are. As we see inflation rising, as we see these conditions worsening, I wanted to show you this. US 10-year bond, and you could look at it right now. Actually, this is a little bit off because it actually touched 3%. The first time this has happened since 2018. Okay? At the same time, gold has fallen. Why is that the case? Well, for some people, for some investors, they were getting into these government bonds of negative yielding, going away from that into gold because they said, hey, if I'm not going to get a return, I might as well just hold gold because it's been quite stable and stable over a long period of time. But now, if I can actually get a yield from it, I'm going to hold paper, these paper bonds garbage instead. Okay, and remember, not physical gold. These people don't buy physical gold, okay? They're buying the paper. And this is just showing us that the liquidity in the system right now today is still at near historic lows. And we can combine that with margin. Investor margin accounts correlate closely with the S&P 500. The more margin there is, the more the stocks rise. As we see margins start to fall, the markets come down with it. And that has been the case right now, okay? So we will follow this, all of this information put together, but nothing more important than the Bored Ape metaverse frenzy raising millions and apparently crashing Ethereum, putting this Ethereum gas fees, so the fees for those transactions, soaring to levels that are just crazy. And so the question is, do you own a Bored Ape? I think it's just crazy. I don't know. Call me old. It's okay. I got the gray hairs to show for it. But that's the world we live in today. Look, if you want to support the channel, if you found it informative, hit that thumbs up button. It's right down there. I do appreciate that very much. I'll see you on the next one. Take care.